PCLN, Priceline.com, MMTs. This is that short at 775 we took. It had a great correction, as it did. What I will tell you is, from the top of that short, right up here at 774.96, to the lows over here 3 weeks later to 678, that was over a 100-point correction. And what did that mean? That meant that this overbought stock, the leadership stock with great earnings and everything else, that means that these put options are coming into play for May and June. And that means that the next cycle down will be another 100 points. It's always averages close to a 100-point reversal. And it's about timing. And Apple the same way. But right now I'm going to just cover this because they're going to report the earnings. And I'm saying here, I'm going to draw a diagonal trend line for you, MMT. And I'm going to draw, first I'm going to draw this one right there because that's where that shakeout was over $100. $100 and some plus. Great short that we called. Great short with the counter trending to get long on the 10-week. Still rising. How bullish can you get? However, there is some divergences that are negative. And what I will say is this. When I look at this particular trend line right here on this weekly level, this is where that broader end of that base is, and it's sitting right on there. However, I will caution people that when you look at it on a weekly level, it's going to be this bar right here, half of that weekly bar, and we're up above it. That means that this upper level right below 800 is where this thing could hit at 798. And then you'll have another, I would say the next correction's worth $150. Yes, I'm not saying that the earnings are going to be bad. They've delivered every quarter. But what I will say with this upcoming quarter is that forward looking is that price line has reached a peak cycle. And we haven't been shorting through here. We were long always over here, 2012, all the way up until we got to the correction. When I hit my price target, you dropped over $100. It was time to be a seller, taking the profits, and time to be a buyer. And then it's going to be time to be a seller again. Now, having said that, when you take a look at price line, I'm going to pull up the price line chart. This is a daily chart now for calendar 2012. MMT. And what I'm going to say, MMT, is I'm going to pull up an Apple chart right next to it. And AAPL. Okay, here it is. I'm going to blow this chart up. And I'm going to take the same calendar move right here. Same chart. I'm going to draw a line here, and you're going to see here how both the names had come down. But on a daily chart, when I draw this diagonal trend line over here on Apple, and I don't care what analysts have got to say, I'm going to select this trend tool here. I'm going to draw a diagonal trend line on Apple to the gap, to the sell gap. This was their earnings. I said that Apple was going to get torched, just like I said Priceline was going to get torched. Once we got up here, we were shorting intraday pullbacks only, not holding them overnight. But look at the amount of correction you got. The two leaders. Now, take a look at the corrections. Take a look at the Priceline correction. Take a look at that correction to that support level. Okay, so take a look at the price line. They both are the same. Now, when I draw the diagonal trend line over here off of this big bellwether, I'm going to come right into here on this daily chart. That's about right where it lands. This diagonal line, that's your gap. It's rolling over. It's got a big one to fill back down in here. It's not going to go straight down right away. But I would be a seller of Apple, not a buyer. And when I draw the same diagonal trend line from over here to right here on Priceline, let's just take this one right here on the first one. Now let's take the second one from that same point to where the upper end of this was. and let's just draw this right here. Any movement up in both names to be sold short, because the counter trend are all based on this movement here, and this one followed the Expedia news the other day. And so we're going to come back up, and the old saying is testing the higher tops in here, this diagonal. So here's your top on the daily, and we've worked overbought. We're not as overbought, but the counter trend is what counts, because that next resistance or double top daily and the weekly, both of them are going to go down. This is your top up here. You can't get above it. This is going to be a near-term support level right there. Any movements, both stocks, I'm negative on both of them, looking at daily and weekly charts. No, it's not because they're a bad company. They're the two best companies in the world. That doesn't have anything to do with it. The problem is that they're in reversal modes. They worked the overbought daily part of it off. Both names did. Because they did. And this is how overbought you were on a moving average convergence divergence level. Not only that, it was ridiculously got oversold over here on 424, where you had to buy the farm, because you got to remember that on a daily level, when the bigger hedge fund managers are looking at this, you were up here at 81%. It was a buying opportunity when I told everybody to get long down here. The correction had happened. Didn't matter what Apple was going to report. That helped it. Expedia helped it. It didn't matter. You were down here at 17.93%. That's where those big people had to cover the shorts and move in. Over here, when you take a look at the Apple, when you were way up here, it was overbought, both on the weekly, monthly,